Yes, we're good. Welcome back to our very first virtual economic development conference. And this is really exciting because I get to talk in person with Acting Controller Brian Brooks.
In person,
imagine that, right? And by the way, we don't have any COVID. I did not have any symptoms whatsoever. And I don't think you have, I don't think you have either. So we're good. And I'm not really afraid of COVID. I mean, I know it's real, but I'm healthy. I wash my hands, everything. So I'm good. So don't worry that I'm close to Acting Controller Brian Brooks. So welcome.
Thank you very much.
So tell us about who Brian Brooks is and how did you join OCC?
Well, that is a great question. Usually the line I give is that I took the wrong turn at Albuquerque, and the next thing you know, I showed up and there I was. But the truth of the matter is, it's kind of two things. One is my whole life, I've been very focused on the role that credit plays in people's lives. And that's because, Faith, I grew up in a small town. My dad died when I was young. It was very hard to cobble together the money that I needed to go to college. And, in those days, there was no tax deduction for student loans, and the government didn't have subsidies the way that they have today. And so I had to borrow loans at 8% interest to basically put myself through college and later through law school. And at the time, it seemed really onerous, how am I going to pay these loans back and everything? But what I came to realize in hindsight is it's credit that lets people take a risk on themselves and build something, you know what I mean? And it turns out that all the studies show that when there's more credit in an economy, there's less poverty because people are able to start businesses, go to college, buy houses, and do all the things that generate wealth in our society. So this has been an important thing to me since I was a young kid, really. The way I got to the OCC in particular was kind of the other big lesson, which is that relationships matter. So as you know, we're sitting here in West Los Angeles. I moved to LA in late 2010 as part of a group that bought a series of banks that had failed in the financial crisis. And our mission was to save the jobs, to save as many of the homeowners as we possibly could who were in these difficult mortgage portfolios, and to turn that thing around. And so it happens that two of the people I worked with on that gig, Stephen Mnuchin and Joseph Otting, became major figures in this administration. So those relationships have turned out to create a long path for me, which has been wonderful.
So now that you're at OCC, and you've been only in OCC for 9 months now, right? By the way, you've done...
Depends on, do you think it's about the mileage or the age?
I know.
Mileage, we've done a lot. Age, 9 months.
Yeah, you're right. You've done so much. So what are some of the ideas and goals you have for OCC? Well, and by the way, OCC is Office of the Comptroller of the Currency. I was trying to explain that to some of the people. And OCC, this gentleman here, regulates $14 trillion of commercial banks. That represents almost 70% of the bank assets. This is how important OCC. They always ask, what's OCC? So, so tell us about the goals too now.
Well, so first of all, Faith, I'll just tell you that what I committed to the OCC team when I joined the organization was that by the time I was finished, we would never read another newspaper story that referred to the OCC as a little-known banking agency. So we've tried to raise our profile and do important things, and that's what we've really focused on every day. So everything we really do is organized around the principle that more credit equals less poverty. We need more access to credit and investment in this country. The problem isn't, we don't believe broadly, that there are lenders targeting the vulnerable so they can steal their money. The problem is lenders are ignoring the most vulnerable. They're not actually extending credit. And so we've tried to do a number of things to solve that problem. One of them is we've tried to make it easier for banks to leverage their balance sheets by selling loans to third parties. You know, that's what our marketplace lending partnerships rule was about, the Madden fix and the true lender rule. What that was really all about at some level was banks' balance sheets are only so big. And so if you tell a bank, hey, you've got $1 billion balance sheet, and all you can do is lend out that $1 billion, and once it's committed, there's no more credit to be extended. That can only serve so many people. But if you tell banks, you can make a loan, and then you can sell that loan to an investor, and then you can take the money you got by selling that loan and plow it into the next loan, then you create a virtuous cycle, right? So now banks can continue to lend to the next person. And the reason that's important is if banks can't leverage their balance sheets, they're only going to focus on the safest and most profitable customers, which, surprise, surprise, turn out to be the rich customers. So if we want credit to be available to people like I was when I was a young kid going to college, we need to create solutions for that. So everything we're doing is about that.
So speaking of solutions, and speaking of a man that's more words than action, let's talk about Project Reach.
Well, so Project Reach, as you know, because you were there at the very inception, so I'm just going to say Faith is going to give me all the credit for something that she helped me conceive and implement. The Project Reach was designed to actually take action, whereas most people only have words, right? And it was designed to take action around these protests of the summer, where people were loudly crying out from coast to coast that there's something structurally wrong with our system. Now, I want to be super clear. I am a big believer in the fact that capitalism has lifted more people in the world out of poverty than any other force in history. I am a big believer in the idea that welfare, while it's important, hasn't created a long-term change for people's lives generationally the way that capitalism has. But I'm also a person who takes seriously the allegation that generation after generation, certain groups of people in this country don't ever seem to benefit from it. And I don't think it's because we have a society filled with racists, but I do think that there's a racial implication to what's going on today. So Project Reach was all about figuring out what are those structures that are keeping certain people out, Black people, Hispanic people, immigrants, poor people in Appalachia, those kinds of groups. And we found some things, and it's not a great surprise when you think about it. I mean, some of the structures are, we only lend to people who have a credit score in this country, and 45 million people don't. Simple as that. So
45 million.
45 million, Faith. This is something like 15% of the country. And here's the thing. Within that population of 45 million, roughly twice as many Blacks as whites. Okay, so if you consider that there are 5 times as many white people as Black people in this country, and yet of the credit invisibles, twice as many are Black as white, that's like a 10x difference. So there is a racial dimension to this. And the thing about it is, it's a problem we can actually solve, right? All credit scores are about is predicting who's likely to repay a loan and who isn't. And there's no magic to existing credit scores. They're just the best thing we've come up with so far. So what I tried to do is to partner with the smartest data scientists, the best technologists, bankers and civil rights groups like NAAC and NDC to figure out what analysis could we do to forecast whether somebody who pays rent and not a mortgage, somebody who pays utility bills but not a credit card bill, will pay a credit obligation. And we're very close to having that rolled out. Now, to be clear, you know, the OCC's role in this is to validate these models to make sure they're safe and sound for banks. The real good work in credit goes to the private sector people who are building this stuff. But we've done, I think, an amazing thing by convening people to kind of solve that. So imagine a world where those 45 million people next year could apply for a mortgage. And some of them who qualify will get to buy houses, and then they'll build wealth like all the rest of us have. That's a major achievement.
Yeah,
that's
so,
what Project Reach is.
So for you guys that are watching, right? I mean, OCC is a regulator. They don't do loans, but they regulate. And there's structural barriers, right? That's always the reason, like the banks say, oh, we're over-regulated. And then the borrower, I don't have enough credit score. I don't know even if I have a credit score. So this is what Reach is all about.
Exactly. It's for us to make it easier for banks to solve these problems. And I will tell you, being as honest as I can be and in full humility, one of the reasons banks aren't addressing some of these problems is because the regulations deter them from doing that. So it's partly our fault. Now, we're aware of this enough that we're going to fix that. But one of the reasons is we have guidance and regulations that tell banks you got to consider somebody's credit score. right? I need to solve that, or I need to tell banks you can use other credit scores. That's what I need to do, is to eliminate those impediments. And we're going to find barriers. We're going to tear them down, whether it's a 20% down payment requirement, whether it's an inability to sell foreclosed properties to another family who would benefit from that. We're going to find those things and tear them down so that we can show protesters and others that we hear you. We do believe there are some structural problems, but contrary to popular belief, we can fix the structures.
Yeah, so regardless who the president would be, OCC, Office of the Control of the Currency, is committed to lower the unbanked and underbanked access to capital.
Absolutely. I mean, look, what I've tried to do in my time here, because who knows how long I'll be here, is to get the agency on a path where we are so deeply committed to this that it's not seen as ideological, and whether it's Republicans or Democrats running the banking system, it's still going to be an agency commitment to leverage market forces to get more people in the system. Simple as that.
Because, the color of money is still green.
It's always green.
So speaking of that, it's not a one size fits all, right? So I know we launched October 30th, the Project LA Reach. Comptroller, can you talk about why did you choose LA and what the Angelinos are expecting to happen?
Yeah, well, let me first say the reason we have to have local versions of Project Reach is that we're a big country. You remember the Walt Whitman line, this country contains multitudes, right? And so Washington is not going to be able to dictate everything that will solve every problem in every part of the country. Different places have different issues. We picked LA first in part because it's geographically the largest city in the United States, certainly the largest county. Politically, it's the most diverse. Racially, it's the most diverse. It's the second biggest city by population in the country. And as you know, it's my happy place.
I know.
So the concept was to come here, and this was a great place to focus on our affordable home ownership aspect of Project Reach, because LA is one of the most expensive housing cities in the country. It's very, very hard for somebody who earns the median wage to afford a house in the city of Los Angeles. And yet, as you and I both know, there are a series of issues that probably could be fixed here. So one of them is there's a huge inventory of foreclosures that aren't being processed very quickly that we could get back into the system and make available for people to buy, right? Remember, price is a function of supply and demand. So if we can increase the supply online, by definition, the price of the average property would go down, which would be a good thing for new homeowners. And second, there's things we can do about the financing structure of home mortgages, which I know is the subject near and dear to both of our hearts. Do we have to have people who can't come up with a 20% down payment take out a second mortgage and pay private mortgage insurance? Or is there a way where we can finance, we meaning the banking system, can finance these properties using some other approach, perhaps equity co-venturers in these houses? So both on the financing side and on the supply side, I think there's work we can do, and LA is a great incubator for that.
And thank you for choosing Los Angeles. So here are some questions. Protecting the country from systemic risk crisis like we experienced in 2008 and has been long mission of the regulatory community. The OCC has been on the forefront of this process. 22 years hence, we're experiencing a self-inflicted economic crisis. Can you comment on how will all the safety valves like Basel capital adequacy, liquidity coverage, collateralization, constant expected credit loss? This is a very complex question. The Dodd-Frank measures and may have helped nation weather the COVID-19 storm.
Yeah, so what I would say is, let me frame the question this way. You began by saying this is a self-inflicted crisis, and you're right about that. It doesn't mean it's not justified, but it definitely was self-inflicted. So if you think about it, in all prior recessions, the recession began with either the bursting of an asset bubble or the end of a business cycle, or as the consequence of some sort of improper credit underwriting, just loose credit of some kind. This situation wasn't caused by any of those things. We entered the crisis with very well capitalized banks, very prudently originated loans, books were clean across the industry. And then the coronavirus came, and you can quibble with this decision. I would probably quibble with it, but we decided to basically turn off the economy as the solution. We could turn it back on at any moment. We could make a decision at any given moment that the quality of therapeutics, the availability of vaccines here in the next few weeks, the fatality rate that we've now learned is relatively low for most people, could allow us to turn on the economy. But unfortunately, in the big states of California, Illinois, and New York, we haven't made that decision yet. So this is an issue. In terms of what all of these post-financial crisis rules will do as we go through this process, the answer is they could wind up having a really perverse effect, right? So right now, one of the problems we will have, if this goes on very much longer, is we'll have a liquidity crisis. Banks don't want to make bad loans. Right now, they don't have good indicators out there of a borrower's ability to repay because unemployment rates remain artificially high. Delinquency rates are artificially high, having almost nothing to do with the original creditworthiness of these borrowers. People don't know if they'll be allowed to earn a living next month or not. And so what do you do? So here's what we've tried to do on a short-term basis. On a short-term basis, we've told banks that they can exclude certain kinds of assets from their leverage ratio calculation or from their regulatory asset calculation for purposes of how much heightened standard they have to operate under, or even for purposes of bank assessments. We've said, look, if you originated Paycheck Protection Program loans for a period of time, you can exclude those loans like as though they didn't exist on your balance sheet when you calculate how much you owe the OCC for your annual license fees. Those are all ways of getting the banks for a temporary period of time to continue lending, right? And to not worry that that's going to toggle them into higher asset thresholds or to screw up their leverage ratios or the liquidity coverage ratio or whatever. We can't do that forever because at a certain point, as you said, our core mission at the OCC is to protect the safety and soundness of the system. So if we're doing this for a few months, we can paper over the fact that there are a lot of borrowers out there who aren't earning income, and we can pretend like those mortgages in forbearance are not delinquent. We can pretend like that. We can pretend like those banks don't have these assets and exclude them for a period of time. But at a certain point, my core mission is to minimize the number of bank failures in this country. That's the most important role the OCC has. So when we decide whether we're going to have a second lockdown or not, right? When we decide whether social distancing and mask wearing has to go on forever or whether we can wind it down as the medical advances that I just described occur, when we make those decisions, we'll be deciding whether banks can survive this or whether the loans that they've originated will start failing at scale. They haven't failed at scale yet. That's the good news. But as I keep saying to everybody, this can't go on forever. So we need to make some choices about the risk and benefits, but also the risk of continuing to shut down the economy 9 months in, okay?
I just hope no more lockdown.
Yeah, well, I do too, and I'm not the person who balances the medical risks with the other risks, but what I worry about is in any decision-making process, if you focus only on one risk and pretend like there's no other risk, you're gonna make a bad decision. So, it's sort of like, as you read about, you could save some coronavirus lives and increase the number of cancer deaths, right? Or you could save some coronavirus lives and increase the number of suicides. You could do this, but consign an entire generation of college graduates to underemployment for the rest of their lives because they came out of college at a time when there were no opportunities. We have to balance those things, okay? It's one thing to say for 2 weeks or 4 weeks, hey, there's the plague of 1348 out there and we need to stay in our houses. But at month 9, month 10, month 11, we have to start taking seriously that there are other values in society, and you'll start to see those choices ripple through the banking system. My job is to make sure there still is a healthy banking system on the other side of that. And that's why I keep saying we can hold it together for a while, but we can't hold it together forever.
Yeah, and I think everybody's doing a good job. I mean, JP Morgan Chase just announced like $130 billion. US Bank, everybody's actually putting together to help small businesses. Their CDFIs is doing that. So, this is what's so great about this country. I mean, everybody just work together, hold hands.
We're resilient. We are resilient. But again, we can only be resilient as long as those banks are profitable, right? When they have profits to reinvest in communities, that's a good thing. That's the virtuous cycle that our system is supposed to be about. That's why we have shareholder-owned banks in this country.
Right.
All I would say, and I'm not sounding the alarm bell yet, but talk to me in 6 months about this, bank profits have been reduced by, depending on which bank you're talking about, 50 to 90% as a result of this. There won't be profits to plow back into that stuff if this keeps going on a year from now. 3 months from now will be okay. A year from now, not totally clear.
No, I know. I mean, seeing this from the banks. I mean, they're not even giving enough philanthropy because there's no money. They're losing money. So
profits are a good thing, Faith. Profits are what allow us to have a welfare state and a safety net. Profits are what allow us to have community reinvestment. Without profits, we don't have all of this, so.
And I know, to me, it's also artificial, the unemployment, because people are not motivated to go back to work.
Well, and some aren't motivated, and some are not allowed. So this is what kills me, right? There are waiters in restaurants, there are dry cleaners and others. There are owners of commercial real estate properties where the janitorial staff and the building maintenance crew and everything, they're not allowed to come to work in some places, even if they wanted to. And that's a tough call in a free society where some people, maybe you and me included, would be willing to take the risk if we were allowed to.
Yeah. Well, let's use our judgment, I mean, is it safe to go to work? Is it safe to connect with people? You take care of yourself. So anyway, I have more questions. I mean, this COVID-19 is just awful. It's awful. It's real. But at the same time, it is part of our community already. It's going to be here for the longest time.
Right.
So just learn to adjust. And this is the time to actually work out, guys. Go out and work out.
Well, look, coming back to your question,
Okay.
I mean, it does have direct implications for the banking system, because banks are putting on assets that are designed to be fiscal stimulus relief for the COVID shutdowns. And that'll work for a while. It's sort of like with these mortgage forbearance. It's good that borrowers who can't pay through no fault of their own get a period of time to take a breather and stay in their houses. That is a good thing. But at a certain point, somebody did invest money in those mortgages, and at a certain point of non-payment, I don't know if that's 6 months or 12 months or 18 months, at a certain point, this pretending like they're current won't work anymore. We need to let them get back to paying like they want to. But if you don't allow people to work, somebody's going to take the loss, whether it's the homeowner or the person who extended them the credit, but that loss will be borne somewhere.
I know. They always say there's no such a thing as free lunch, right?
That's right.
Yeah. So going back to some question. The OCC has been particularly active with regards to the Community Reinvestment Act and issued a final rule updating its regulations with regards to CRA. Can you share with us the objectives and the update on how the banks serve the communities in the future?
Yeah, well, so look, the purpose of CRA reform at the very beginning, when we first walked down this road, was to acknowledge the fact that a lending and investment mandate that was centered around bank branches didn't make sense in 2020 as much as it made sense in 1977. Okay, once upon a time, you all remember this, you went and banked at a branch. I mean, I remember in high school, if I wanted to go on a date on a Friday night, I had to get to American Federal Savings before they closed at 3 p.m. and bring my passbook and withdraw $50 from my checking account. In Pueblo, Colorado, it was probably more like $20, okay? But if I missed that bank branch and it closed, I was done for the weekend. There was no ability to get money. Mm-hmm. Banks deployed technology, Faith, in ways that caused them to shut down 10,000 or more branches just in the last 20 years alone. And again, big surprise, the place where they pulled out their branches were generally the poorer neighborhoods. The thinking being, well, in the poor neighborhoods, they can bank online or they can go to the grocery store or something like that. We're not going to have branches there. And so the core thing was, we can't let them take out their lending and investment from those neighborhoods just because they pulled out their branches. They still gather deposits from these people. Even if they're online deposits, they need to lend and invest. And that was a key motivator of this. Second key motivator of this was that there were communities that were not defined as eligible recipients of CRA activity in the original rule. In the 70s, the focus of the country was really on decaying inner cities. And so the focus was, we need to rebuild our inner cities. They were heavily minority. There had been white flight was the issue of the late 60s and 70s. We need to solve for that. Today, I think we have a much broader view of underserved communities. We have Native American country. We have rural America, where in many places, there's not a bank branch for 70, 80, 90 miles, There's the farm belt of the South and the Midwest, where often there are very few banks available to serve community needs. And so we defined those as eligible recipients, those kinds of communities which previously were excluded. And I think that's really key. And then finally, we looked at a system where the way that banks were scored in their CRA performance was highly subjective. And so what would pass muster in one part of California might be rejected in some part of North Carolina. It was very discretionary, and it was also subject to manipulation by a lot of outside groups. And so our point was, if we can make these performance standards much more objective, if we can say these activities qualify at this level, then it's much more likely that the dollars will reach the intended recipients, namely low and moderate income people, and less of it will leak out of the system to various activist groups and others who may or may not be doing good work, but they're not the people the act was intended to benefit. It's the actual LMI individuals that it was intended to benefit. So I think we've solved a lot of problems with that. We're on the front end of the rule, so we'll see how banks perform, but we think it's a major advance.
Yeah, so for those of you that really don't understand, CRA, it's a Community Reinvestment Act. It's basically the banks have to lend, have to invest, and provide services to low, moderate income. And with the CRA, Community Reinvestment Act, the investment that the banks are doing now, I believe, around $430 billion, with the new CRA rule, will increase to over $100 billion. So can you imagine the lending, the investment, and the services that the bank can do to help the low moderate income? And part of this also is the CDFI. NAAC is a community development financial institutions. There are 1,100 CDFIs in the Okay, I think we're back. We're back. Sorry about that. I know we paid electricity, but this is what happened on the virtual. We try everything, but this is a really cute question, so we can just start all over again. Why is there the word acting before your title?
Acting.
And you never acted.
I've never acted. Well, so the way the government works, is that usually to be the head of a government agency, one gets nominated by the president and confirmed by the Senate. And in my case, I became the head of the Office of the Comptroller of the Currency because the agency head who preceded me, Joseph Otting, your friend and mine, resigned for various reasons, and there was a vacancy at the top of the agency. And so under our statute, there's a provision for the Treasury Secretary to appoint an acting controller. And so the Treasury Secretary appointed me to this role pending the election. And, we have a sense, I think, of the direction the election is going, but we don't know for sure. So, if the president wins re-election, then I will be nominated and confirmed by the Senate. And if the president doesn't win re-election, then I will, serve out the end of the administration and sort of see what happens in January. But so essentially, I have all of the powers of the controller without having been confirmed by the Senate, which I can do for a period of time as long as the Treasury Secretary designates me to do that.
So they said, are there some regrets in One West, etc. As a banker.
Yeah, I would say that there aren't. Did everything I've ever done turn out exactly the way that I would have wanted? I mean, who among us can say that that's the case? I mean, if I really had lived my childhood dream, I would be a concert pianist right now, someplace. Instead, I play keys in a garage band, right? So this is kind of what happens in your life. But everything I've ever done is something that I've learned a ton from, including, most importantly, my mistakes. And, I think we can all look back on some of those things. But listen, every place I've been, I felt like we did make a positive difference. Now, most of the places I've been were controversial. And the funny thing is, if you have a legal background, usually the best jobs are the most controversial ones, because those are the ones where they need your unique talents. If I was just administering a healthy organization someplace, they can find somebody much cheaper than me to do that. I like to think I'm the guy that gets called in when there's a real fire. And so I think about the One West Bank situation. You remember the robo-signing crisis of 2010, 2011, and I played a big role in it, and it was a big problem. I like to think that we figured that out faster than most other banks. And because you've looked at our data, we were very proud of the fact that we were the highest rated loan modifier by the Obama administration Treasury Department.
I can swear on that.
Yeah. But at the same time, listen, it was a very difficult time, and there were very difficult decisions that had to be made. There were people who couldn't, under any reasonable expectation, ever repay those loans, and foreclosures happened. And those are hard, gut-wrenching human decisions that you have to make. But still, the fact that we were able to modify 80% of our delinquencies and keep people in their home, there's no other bank in America that achieved that. And so for all of the hard choices we had to make, I'm still very proud of all the people we saved. I really am.
I think we all learn from our mistakes. I mean, I make mistakes, not every day, but
Yeah, most
quite
days. If you're like me, most days. Yeah. But here's the thing, Faith, what I would also tell people, I mean, there's a little bit of financial services in this conversation, and a little bit of like leadership life lessons that we're talking about. And one leadership lesson I've learned is, if you're not creating some amount of controversy, it's usually because you're not really making any decisions. Right. And my belief is, I have a real bias toward action. So just this morning, for example, we're getting some Community Reinvestment Act guidance out on Monday. And the team came to me with 5 issues that just had to be decided. I had one group that was arguing with the other group, and it was hard to come together. And my job is to just decide. And I'll probably get 20% of those decisions wrong. But it's better to decide them wrong than not decide them at all, because if there's one thing markets hate, it's uncertainty. So I'm happy to do that. I'm happy to be accountable for my judgments, but at least I'm making them, which is more than a lot.
And that's true leadership, Ryan. To me, the CRA reform, this is a 40-year-old CRA reform, 10 years in the making. So many controllers already tried doing it, and thank God to former Comptroller Joseph Haring, and you and Grubetta Gardiner and the whole team, right? And even Chairwoman Yelena Maculam, let's just do it. And that's what leadership is all about. I'd rather have some few mistakes rather than not doing at all.
Right. Well, I worked in Silicon Valley for 2 years. And there's a line I learned when I worked in Silicon Valley, which says, if you're not embarrassed of version 1.0 of your product, you probably waited too long.
I agree.
I think it's a life lesson.
Yeah, you bet. So speaking of access to credit, right? CDFIs. How can you encourage banks to invest more on CDFI? Right now with the pandemic, it's really knowing your customer. And being a CDFI and the 1,100 CDFIs, we know our customers. We know what ability to repay means. Sometimes I wonder what that ability to repay means. To me, the ability to repay is they have jobs, they have income, they have family that if something happened, they have character that, I will not allow any money that I borrowed will go on default or will not pay. Can you talk about CDFIs and how you can encourage other banks to invest more?
Yeah, well, so there are a couple of things I think embedded in what you say, Faith. One of them is, to the extent that we reduce credit assessments to a formula, which has kind of been the trend over the last 10 years with the adoption of the QM rule and the QRM rule and some of these things.
Yeah, tell them what QM, so that way, because some of our audience.
So in the wake of the financial crisis, which was in part precipitated by mortgages, right? First the Congress and then the bank regulators adopted a rule called the qualified mortgage rule, which says that you can't make a loan to somebody if you don't have a reasonable expectation that they can repay it. And as part of that rule, the regulators put out an appendix with a very complicated formula figuring out when can a person repay. The idea was, well, first of all, they can have no more than 43% of their monthly income spent on the mortgage. And second of all, there can be no less than X% equity in the property and blah, blah, blah. And, in the main, I think those rules were well-intentioned. And in the main, they probably were directionally positive. But like any formula, it's going to exclude large numbers, a minority, but large numbers of people who could repay the loan. And the result was to constrain credit to some people who could have repaid. And your point about CDFIs is that CDFIs tend to be closer to their customers. They know their customers better. They live in the community. And again, CDFIs largely exist to serve poor urban communities that aren't well served by big banks, at scale. So, the point sort of is you can't reduce everybody to their numbers. You can have broad, gross, generalizations about people with certain numbers, but there's some people with a 650 FICO score that would still repay the loan. There's some people with 5% equity who would still repay the loan based on their membership in the community, based on social, sort of obligations that they incur. And so that's one of the roles that CDFIs play. And so when you say, what can we do to have more of those? I would say, well, coming back to Project Reach, one of the things we're trying to do is focus on a certain species of CDFI, which is the minority deposit institution. And we believe that especially in minority communities, there is a trust building aspect of dealing with a banker who lives in your community and looks like you that shouldn't be lost just because we also have anti-discrimination laws that apply to all banks. You've heard me say this before, that one of the craziest things in America is that there are hundreds of thousands of people in this country who are paying 7% on their mortgages when the market rate's below 3%. And they're doing that because when they get refinance solicitations in the mail, they think they're being scammed. And one of the roles that an MDI can play is to come in and say, hey, I'm in your community. You know me. You know I'm not scamming you. Let me offer you the 3% mortgage and give you that benefit. So the trust building aspect of these minority deposit institutions, in particular among CDFIs, is really good. And the last thing I would just say is we've tried to make it at the OCC a lot easier to come in the door and apply to charter a bank. So to the extent that there are community leaders in places that want to start CDFIs, we're really committed to reducing the time it takes to get a bank approved from 18 months on average to less than a year on average. We're committed to working with you in a way that hasn't really been done in the past to make the front door an easier door to walk in. And I think we really need to win that in order to achieve what you're talking about.
Yeah, and not just the MDIs, but like the community banks. So now that the banking has changed, it really changed, and you are techie guy. By the way, this man is so smart. Harvard graduate, everything, lawyer, and he's not a lawyer. I remember Bob.
I don't think Faith is helping me here.
Bob, this is what Bob Ginesa always told me. I don't want to be a lawyer. I want to be, it's not a lawyer.
Do something.
Yeah, do something. These are all the things, the guidelines, but it's through leadership. So with pandemic, things has changed when you really don't have to go to the banks anymore. Even before banking, I hardly go to the banks because I can do everything on my iPhone, especially now. The banks close early. What's digital banking looks like to you, and what's the safety and sound of that, and how important is that to the minority groups? I'm Filipino. We are the tech country of the world, right? It's actually the immigrants, the people of color, are so technologically savvy.
Yeah.
Because they don't have anybody to help them. So talk about the digital banking.
So here's what I find interesting when we talk about digital banking, and especially its implications for financial inclusion. So in this country, we tend to think that somehow if you ask people to bank on their phones, that's more likely to help rich people and white people versus poor people and minorities. I don't know why we think that. Maybe it costs money to buy the phone or whatever. But if you look globally, if you look outside of the US, the countries that have the most advanced financial systems tend to be countries in South Asia and East Asia and even Africa, where they never bothered building Finance 1.0 the way the US did, right? So I always say the curse of our country is we were the leaders in financial services in 1910. And we've been trying to build all of our innovation on top of an architecture that was built in 1910. Whereas if you went to Korea, Korea was a backwards country in 1910 and was a war zone in 1950. And it now has the most advanced communications and financial infrastructure in the world because it went straight to digital. So I would just say, if you look at countries that are digitally native versus in our country, we're not digitally native, we're engrafting mobile banking on top of a bunch of antiquated technologies. It looks and feels very different. So what I would tell you is, come back to what I said earlier about how banks have pulled branches out of a lot of poor neighborhoods. Okay, what's the solution to that? Is it to force banks to reopen branches in those neighborhoods? That's never going to happen. The solution probably is kiosk banking in grocery stores with a video interface with a teller, in some call center, or mobile banking on a phone, which is what everybody under the age of 30 knows how to do now, just as a native sort of thing. I mean, I'm old enough that even as tech excited as I am, I still sometimes write checks. Sometimes I even go to the bank to deposit a check. Isn't that crazy? But my kids, they just remote deposit capture with a photo on their phone and off they go. It's great. So I think the inclusion aspects are these areas that don't have bank branches don't have to lack financial services. If we start thinking about our phones as the delivery channel for financial services, it can be very pro-inclusionary.
Yeah, and that's why I love, One West actually put kiosk on a grocery, like Island Pacific. People goes to the grocery store, no matter what, pandemic or not, lockdown or not, they're going to grocery stores. I mean, they don't want to get hungry. So can you imagine if everything is there already? So
right, exactly. Go where the people are, which nowadays isn't a bank branch.
Yeah, I just want to talk more about leadership. How can we help the underbanked? I'm really sad that the number one country in the world, the richest country in the world, we still have 45 million or 50 million. And it depends who's really talking, right? Sometimes, 100 million that has thin file, no credit, and bank and underbanked. And, Grubetta says this all the time, it's very expensive to be poor.
Yes.
And it still is. And it just saddens me when people come to us. I mean, you guys, that your interest is 10%, 12%, where your friend has 3%. Even with the refinancing right now, it's still hard to refinance because their credit score is below 680 and that ability to repay. As Brian Brooks, as a person that has a big heart, and he has a big heart, can you talk about what's the reality? What can people do?
Well, since you phrase it in terms of leadership, let me start with what I think is the most important part, which is we need to take the politics out of this. Okay. There is a strong sense, and you see it in the debate over CRA reform. There's a strong sense that Republicans shouldn't be allowed to touch civil rights laws, or Republicans shouldn't be allowed to be seen as helping the poor people. It's bad for Democrats if Republicans are seen doing that. I think it's fine for the parties to duke it out on all kinds of various, issues of what should the tax rate be and how many states should we have, and that's all fine. But when it comes to real human issues, like, can this person buy a house to house their family or not? Can this person borrow money to take a risk on themselves to go to college and try and make their life better? That's too important to be ideological. So my basic view is, if we would come together around the idea that people who disagree on other things but agree on this can work together, I think that'll change everything. Let me just tell you a story. So when I was general counsel of Fannie Mae, I was at a lunch one time with a person who headed a nonprofit. This nonprofit was focused on, it was that ban the box initiative. The idea was that you shouldn't allow employers to ask about minor criminal histories of applicants, because that had a tendency to keep young Black men from getting jobs when they got released from prison. And she told me that, she said, we've got such broad-based support for this initiative to help young Black men get jobs out of jail. She is so broad-based, I just got a call this morning from Charlie Koch, one of the Koch brothers, wanting to contribute to our effort. Now, obviously, I couldn't take his money, but still, it's amazing how broad-based the support was. I said, why couldn't you take his money? It was the Koch brothers. They're carbon polluters, and they're terrible people. I said, but see, here's the thing about this country is that they agree with you on the only issue you're working on. Why can't you come together around the thing you agree on, right? So even if I want low taxes and you want high taxes, if we both believe that we need more credit and investment in poor neighborhoods, why can't we work on that together? And then we can fight about taxes later. That's one thing that's wrong in our country, is we've separated into our camps. would be way better to figure out what do we share in common and make those things happen. That was the genius of Bill Clinton, by the way, after the 94 midterms. What he understood was, hey, my really, really polarizing agenda, that's probably not going to pass, but there are things that I can work with Republicans on. Let's go get that stuff done. You know, focus on what we agree on. That's the leadership lesson.
Oh, this is like a battle for me. Our people don't care about Republican, Democrat. All they want is jobs.
They want results.
All they want results. They want to buy a home. They want to have a loan. They want to grow their business.
Right.
They want to have a good jobs. They want to have a good education. So I'm really praying, actually. I'm praying that with whoever leads the country and whoever's the CEO of any bank, worry about the people that made you where you are. You know, be more corporate social responsible. Increase your philanthropy. Bob Ginesta has been asking for 2% of your net assets, your net profit, to give back. Because when you give back, the Lord gives back to you 10 times more. And actually, you're going to have more customers. For the banking industry, it's the same thing. And this is why I love CRA. It's only the bank that are mandated through CRA to do investment, right? To do lending, to provide services. I mean, tech companies are just racking.
Look, I mean, Faith, as you know from our work together, the most sustainable way to help people is to find profitable ways of serving. That's the most sustainable way, because philanthropy comes and goes. You know, philanthropy, when the economy goes down, it goes down with it, right? Philanthropy usually comes from rich people. When rich people's capital gains are low, they tend to donate less, which then hurts poor people at the time they need help the most. But if we can find ways of making it profitable to serve people, if we can align people's interests and stop thinking that the interests of poor people are antagonistic to the interests of rich people, that's when we'll move forward as a society. We got to all be in this together, is my basic view. And that's one of the reasons why, as you know, in trying to solve the affordable home ownership problem in Project Reach, we're really focused on ways that let mortgage companies make money, bringing more people into home ownership. Philanthropy is good. We should always have that. You and I both donate to causes that we care about. But if you want to scale this, if you want it to be sustainable, it's got to be okay to make a profit. You know, if you told grocery stores they all had to be nonprofits, we'd have food shortages, right? They make a profit, and we have access to a wide variety of healthy food in this country. That's what makes this country a rich country. We can do that for financial inclusion. We really can.
My good friend Jeff always tells me, in order for to be charitable, you have to be profitable.
That's right, right. Where do you think the donations come from? They come from excess profits.
Right. So, is there anything you want to say to the attendees about what your plans and where do you think the bank should be doing? Where everybody, small businesses, big businesses, what should we be doing to make this country greater?
Well, I personally believe that we have to move forward and not backward to make the country greater. And that has a lot of implications. But one of the reasons that I'm so interested in tech is because tech companies, you know, disruptors, startups, they exist because they see a market that isn't being served by the incumbent. And so when people say, well, I'm not sure if fintechs are good for poor people, or I'm not sure if fintechs are good for inclusion or whatever, what I say is the whole reason fintechs exist is because banks are not doing a good enough job at something. Usually what it is serving people who are not the mainstream customers. So, you know, I was on the board of a marketplace lender whose whole thing was lending to near prime customers, customers who had FICOs above 600 but below 680. Banks ignored those people, and yet 96 times out of 100, they repay their loans, right? But they can't get credit at the bank. And so this company I was on the board of would go and lend money to those people. Yes, they lent money at a slightly higher interest rate than a bank would. Not much higher, but a little bit higher, but way cheaper than payday lenders. And they created a bottom rung on a ladder that these people could use to climb the ladder. I am a guy, Faith, I have to tell you, I grew up in Pueblo, Colorado, a town with 20% unemployment, a town where 13% of the people went to college, where the average house price is $60,000. I am a big believer in bottom rungs on ladders. And I think when we try to protect people by taking away those rungs because it offends us that somebody pays 2 percentage points more than we do, or it offends us that somebody has to work a blue collar job and we work a white collar job, you're not doing them favors, because I did those jobs. I made $2.01 an hour plus tips in my first job. Bottom rungs on ladders let you climb.
I made more money than you. I was making $3.25.
That's like 50% more than me if you just do the math.
Yeah, so I'm going to read some questions because I know there's a lot of questions. So one here. Recent years have been pushed by banking and finance industries to innovate. These include fintech payments, internet banking, new forms of institutional charters, and emerging financial instruments. Among the plethora, what notable innovations do you see on the horizon that will improve how the banking system serves the U.S. economy's needs?
Well, I'll tell you the things that I'm most excited about, but there are many. Okay, so the most revolutionary ones would be, imagine a world where artificial intelligence is fully unleashed on credit underwriting. That's the ultimate solution to the credit score problem that we've been talking about. Imagine a world where you're not reliant on credit scores. We can just turn an algorithm loose and look at everything there is about Faith Watson's, everything about it. Where does she live? Where did she go to college? What did she major in? What is her profession? What is the market economy where she lives, et cetera, et cetera. And the AI could just say, yeah, she's going to repay the loan. It doesn't matter that the credit score is a 680 now. All of those other factors tell me with great certainty she's going to repay the loan. If we had that going on, our credit underwriting would be more accurate. We would stop making loans that default, and we would make sure that we didn't deny anybody who was going to repay.
When do we start this?
Yeah, right? We got to start this. Here's another example. Blockchain technology, it's buzzy, it's not buzzy, depending on the year you're talking about. But blockchain technology for things like loan registries, for things like credit assessments is far better than anything we have today. If you think about one of the big messes of the financial crisis, it was that you had people foreclosing on homeowners and they couldn't prove that they were the person that was entitled to repayment. This is what they called the show me the note defense. And when it came time to prove that you were the note holder, you'd go to your warehouse and you'd find that the note had been lost, or you'd find that the electronic system that they used to use to record mortgages had a fat finger error, and so no one could tell. And the result was that foreclosures took a long time, markets were depressed, people who were paying didn't see their real estate prices rise the way they should have. Blockchain doesn't have that problem. Blockchain is an immutable and absolutely unchangeable and transparent registry of sales of loans from person A to person B. Solving that problem and creating that much more certainty would unleash millions more dollars in credit for people.
What are we waiting for?
And I'll tell you what we're waiting for. We have in this country, like in every country, something that the behavioral scientists call status quo bias. Status quo bias is a cognitive error that the brain makes where we believe that the status quo is the risk-free situation, and any deviation from the status quo is risky. That's the way the human brain thinks. It makes us fail to understand that the status quo is also risky. We don't appreciate it. So it's sort of like people think if they keep their money under the mattress, it's safe. But if they invest it in a mutual fund, it's at risk. And yet we all know that because of inflation, it's risky under the mattress too, but we don't see it that way. So we need to get over ourselves a little bit on this and start looking with a clearer eye at what's really going on. When we start doing that, we will realize that we've got to go and let the future unfold before us. The best thing about this country has always been our risk-taking, dynamic innovation spirit. That's been true for 200 years. We shouldn't stop now, but I am worried that we got to a certain point as a rich society where we thought that our best days were behind us, and now it's more about protecting what we got and redistributing it than growing.
Oh my gosh, this is so interesting topic because, I know I'm a good borrower. I have a good job. I have a good character. My credit score will not go up over 720. And now that you're talking about that, if this AI will just analyze who Faith Bautista is, my credit score will be 800 because I pay. A borrower just came to us and she's never default. I mean, her character, she donates money, she helps people, but for some reason, her credit score is below 600. So she cannot access to capital. So she goes to a payday lender. But when I look at her, she has the ability to repay.
Right.
What can our community, what can National Diversity Coalition, and guys, listen to this. If we have to write, and I still believe in power of people. I still believe that when we send to the banking committee, the senators, the Congress, the regulators, let them know what the reality is. Why is it that when I was in China, I did not have any cash? I had everything. I mean, they have this WeChat, right? And when we go to the Philippines, even the poorest of the poor has a cell phone. The money remittance, I mean, how is billions of dollars, like I think $12 billion just, or $20 billion, I mean, hundreds of billions of dollars are being remitted just between the China and they are, it's, you just get like that. But we want safety and sound. We definitely want to do that. With the technology right now, there is no reason that we're so behind. What can we do?
Well, one thing you can do specifically with an organization is you can stand up and say, we think these innovations help poor people and help minority people even more.
Can you tell our people?
This is the truth. I mean, let's just take a couple of examples quickly, because I know we've only got a minute or two. Think about cryptocurrency, for example, which many people think is the realm of speculation for super rich tech people. Except here's what cryptocurrency is really about. Cryptocurrency is really about making it easier for people to send money across borders without having to pay for an exchange. So if you are a Guatemalan immigrant in the United States, and right now you're paying a $7.50 fee to Western Union,
$12
plus a currency conversion fee, right, to send money home. But with crypto, there is no currency conversion fee, and you can do it for essentially free, right? You need to stand up and say, this is important to our community. This is not a niche issue for Silicon Valley tech bros. This is an issue for Latin American immigrants that we should care about, okay? South Asian immigrants, this matters, right? You should support the FinTech charter, because the theory is banks, important as they are in our system, are expensive, slow, and they only serve the middle 80% of the society. FinTechs exist to disintermediate that and to serve the people who aren't served. It's very controversial what I'm doing on FinTech charters. I need support on this. And if I had support from major diversity organizations, that would make a difference. But right now, all of this stuff is seen as the province of rich venture capitalists, not as the province of the masses. I'm here as a kid from Pueblo, Colorado, okay, who had to borrow money to get out of town and go to college. I wasn't born in a rich family. I have no, quarter that I'm trying to make for big bank CEOs. I'm here to help people, but I need people like you to help me tell that story.
So everyone that's watching, I mean, let's study this more. All we know is access to capital. We want it easy, and that way we can work harder. We have more time to work. We have more time with our family rather than figuring things out. Whatever we can do, and whatever career you're going, Brian, we're here for you. I can see it right now. I mean, I'm feeling the Holy Spirit, but there's got to be something that needs to be done. And this has nothing to do with any politics. This is about innovation. And innovation is good. Actually, since I learned how to use my iPad all the time now, I can read more emails rather than just my cell phone. And the technology right now, the only thing that I'm asking if this will ever happen, and I'm asking this also for the fintech company, is to have also the CRA, right? I mean, don't forget that we need to have whatever it is, it smells like or looks like CRA. We have to make sure that, don't forget the people. Don't forget the faith-based organization, the churches that cannot get a loan because they don't have the ability to repay. There's so many churches right now that could actually get a loan, but it doesn't fit the box. So maybe with your artificial intelligence and all this, I'm not a technology person. I really believe things can happen. So let's make this a movement, just like Reach. This Reach actually, it's phenomenal, phenomenal. I'm so excited about this. When Comptroller and I had coffee, and I told him, I said, Brian, I don't want any more talks. I don't want any more meetings. Time is of the essence. I just turned 60. I got to do more work. I only have like 7 years to be as productive. Although I think I can do more than that. But time is of the essence. We're lagging behind. And this Project Reach, if you don't know about that yet, go to occ.gov /reach. Ooh, really good.
Well done. Yeah.
And then the local Reach in LA and I know eventually this will happen in different areas of, I mean, different big cities. Get involved. Get involved. Don't think like I cannot do this, and like you can write letters, and this is what National Diversity Coalition, National Asian American Coalition is all about. And they true listen. They really listen. Regardless who the next leaders would be, everybody has a big heart, one way or the other. The thing about this Republican and Democrat, we all want the same thing. We want to do good. We want to serve people. So, but they cannot do that without us being proactive. So I'm only one, our board chair, Jen, the board of directors, Cora Oriel, and all the members. If we can just, it's power of marketing, power of multi-level, like understand what the issue is, and let's find a solution. I'm co-chairing the Reach in Los Angeles. I'm one of the member for the National Reach. Talk to us. Sometimes it's hard to talk to the CEOs or talk to Comptroller Brian and others, but actually the civil rights leaders, all the members of this the Reach program, we're here to listen to you and look at what's happening and give the recommendations to Comptroller Brian. So this has been wonderful. I mean, I'm hot right now. I'm feeling hot because this is the best fire chat. This is really chatting because this is good because nobody's watching us, but two people here are making sure 2 minutes and 1 minute. But for any advice that you can say in the leadership, please.
Yeah, look, the point is every day you wake up and you have a choice. Are you going to do something to make a difference? Or are you going to push paper around your desk? You and I are people who don't believe in pushing paper. Right? I don't know if I'm going to be in this job tomorrow. Am I going to drop dead tomorrow? Am I going to be in this city or that city tomorrow? But what I do know is what's right in front of me today. You have to make decisions. You have to be accountable for those decisions. And you have to move forward. That's what we have to do. And I'll tell you, one of the weirdest things about the last 9 months is it feels like the country has stood still. It feels like 2020 was the year that never occurred. But in fact, what we really need to do is go forward. Okay, that's my message.
Great. So I'm so excited that I forgot what's next. But thank you so much. I hope you enjoyed as much as I did. This is going to be in YouTube. It's on Facebook. So if you missed anything and if you have a comments, please let us know. There's also, I know OCC has a lot, has a website that you can make your recommendation. And on any CRA, let the banks know what you need. And I mean, they probably could help or they might not help. But CDFI, nonprofit organizations are here for you. So thank you so much. And thank you. Can I give you a hug?
Thank you, Faith. Thank you so much.
Thank you. This has been great. So I think we have like 5-minute break and we'll be right back. Bye-bye. Salamat.